finally fallen in place, but the foremost thought on investors' mind is when that will reflect on the ground and subsequently in earnings. So to join the dots, Edelweiss has invited a host of corporates to speak at the Edelweiss India Corporate Day Conference. Nischal Maheshwari, the head of institutional equities at Edelweiss Securities, joins us now from London. Thanks, Nischal, for joining us from the sidelines of your conference. The market has been on a downtrend clearly in the last many months. Where do you think things are headed in the near term, and what is the mood among the clients that you've spoken to?
Thank you. I think we are having a fabulous day at the conference. We have around 8 or 9 corporates who are here, and the response has been very good, especially from the client side. So yes, I agree with you that the market is hitting a new low basically, and there is a huge amount of volatility across the world. But I believe India is a sort of an oasis basically, where I think there is much more calmness given the strong fundamentals. So I think the interest is very high. Almost all large long-only funds are here at our conference meeting corporates.
Nischal, hi. You're meeting a large number of clients in London, and you speak to a lot of long-only funds as well. What's the mood like towards emerging markets? Are global investors in a panic mode?
I don't see any sense of panic among them basically. They are pretty comfortable. Rather, they are looking to invest into newer stocks, newer companies. And the kind of interest we have seen in the... so I think part of our corporates are mid-caps, and there is a very good response to them. So I do not see any sense of despondency or going away from India. So yes, the turmoil is there. But I think at the moment people are looking this as an opportunity to go out and look at and invest into India rather than actually selling out.
A lot of mid-caps have also corrected sharply, Nischal. What are you advising your clients to buy at the current levels?
So I think there are 3 themes which we have been playing very clearly. One is the urban consumption, which has been which is coming up pretty well. So we have been advising clients to look at stocks like Z, Dish TV, Wonderla. So some of these stocks basically which we have been pushing clients, and some of the auto pack stocks like Maruti. So these are some of the stocks which we have been pushing them to look at. The other stocks which we believe are doing well is the export theme. And there we are asking the clients to play through the IT. So our top pick remains to be Infosys, followed by HCL Tech. And in the mid-cap as persistent. And again, the third theme which we are saying is the economic recovery, and we are asking them to play through some banks. So I think that's the way we are asking clients to actually look at the current market.
Okay, you spoke about IT stocks, but we've seen some bit of correction in IT as well. But pharma, barring a couple of stocks, is still holding on and resisting touching previous lows. What are your top picks in this particular space?
So I think pharma also should be a beneficiary. There is no doubt about that. The only thing I believe that we should avoid companies which have got large exposures onto emerging markets. So there is companies like Cipla and all basically which have got within the export 60% of that coming from emerging markets. And I think because there the turmoil is going to be there because of the currency. So wherever you are saying there is a US focused a company, I think there the growth should be much stronger and the benefit of the currency should come. So in the large cap we like Sun Pharma very clearly, and in the mid cap we like IPCA. These are the 2 companies basically which we like very much.
Okay, since you broadly spoke about the fact that the economic recovery theme is continuing, the GDP growth though is not indicating a recovery just yet, and the government spending is also on the lower side. So within the macros, which sectors should one look at to play this recovery theme as and when it comes about?
So I think the government expenditure numbers have been pretty strong. I think on the Friday or the Monday numbers which came out also indicated to that. So we are telling people that the government expenditure theme only should be played within the recovery cycle. So that one I think through the construction sector, because construction, and we are saying very clearly not the asset creator, not the asset owners but asset creators. And there our topic remains to be Jayakumar infrastructure. So Kumar and KNR Construction is our two companies basically which we have been pushing for investors to play in this theme.
Okay, what about banking? That's the sector which has been out of shape, whether it's PSU banks or even private banks. We've seen private banks actually now getting into a bit of a bear zone for stocks like ICICI Bank and HDFC Bank. What's your view on some of these names?
So I think in this current scenario, if the economic recovery does come through, I think we should play through a mix of PSU and the private sector banks. And the stocks there we like in the private sector is Axis Bank and followed by ICICI. And I think on the PSU side, we like SBI and Bank of Baroda.
Okay, a lot of brokerages have been cutting their targets on the Nifty and the Sensex, Nischal. Is Edelweiss also looking to revise their targets anytime soon?
So we have cut our current year targets from around 15-16% to around 10% now growth, but I believe that should end up somewhere around 6 to 7%. So I think further cuts will still happen as far as FY16 is concerned. 17, we are all hoping and believing that the recovery is going to come in. So I don't see any cuts happening at the moment on 17. But maybe the absolute numbers will cut down because your 16 numbers will be down. But I think as a percentage growth, we are still holding on to around 14-15% growth in 17.
Okay, so does the market look optically cheap now based on lower expectations?
So optically, I think at around current, I don't see. I'm not aware what is the market at the moment, but I believe at 7,700 levels yesterday, what we saw. I think market is fairly priced. I think along with the international volatility, I think market may go down to a 7,500 number. But I think all dips should be used to actually accumulate in India. And what my view remains to be, given the volatility is going to be there for the next 2 or 3, at least a quarter or two, then one should be looking to buy in smaller chunks rather than coming and investing at one go. So I think it's time to accumulate at these levels.
Okay, time to accumulate at these levels. But Nischal, you spoke about the 7,500 levels. Do you think that could be the floor for the market in the near term, or is there a potential of further downside as well?
So, see, I'm only looking from a valuation perspective. I don't know basically how technically the market will go. And in times of panic, we have seen market behave irrationally both the sides. So it might happen, it may go down to maybe whatever 72, 7100. But I think 75 is a good enough level basically to go out and invest aggressively in the market.
Okay, so given the way the earnings and the way global environment is, what kind of upside do you see in the next 12 to 18 months?
I think anywhere between 12 to 15% upside.
All right, Nischal, thanks a lot for your time today, and good luck with the rest of your trip. That's Edelweiss.